You have probably heard before that the Toronto real estate market is the bellwether, their market leader for the Canadian real estate market. And now with listings piling up and buyers drying up, is that what you can expect to see for the rest of the Canadian real estate market? I'm here to tell you why that's absolutely wrong. Hey there, and welcome back to Bald Prairie Real Estate. My name is Matthew Pfeifer, real estate agent in Regina. That's my trusted assistant, Matilda, just back from the groomer, sporting her new do and brand new bandana. And this is the weekly news recap, where I go through what I think are the most interesting Canadian real estate related news topics, give you my thoughts and opinions on it. I won't be doing a video next week, taking a week off to go on a family vacation. So I'll see you guys in 2 weeks. But of course, we're going to start this off with another one of my terrible bad dad jokes. And this one comes from a viewer, Karen, who called me to give me this one. And I'm really excited for this. Why can you not trust atoms? Because they make up everything. If you have a terrible joke I can use in a future episode, put in the comments below. Let's get into this week's Canadian real estate news. We'll start off talking about the Canadian Real Estate Association's updated housing market forecast. Unlike Royal LePage, which last week released their updated forecast and revised essentially nothing, the Canadian Real Estate Association has gone and revised downward their forecast for the Canadian housing market. And when I talked about it in my 2024 predictions video, the Canadian Real Estate Association had 2 predictions. The first one was that sales would increase, and I said that's an absolute no-brainer because we had one of the worst years ever in 2023. They had expected sales would increase 7% a year. They revised that down to 6%. And they had anticipated home prices would increase about 4%. They've revised that down to 2.5%. Talked about it in my predictions video. I thought this was actually a pretty good prediction and more likely than not to be relatively accurate. I think this revised prediction is probably even more realistic given how the spring market has gone in a lot of Canadian cities, which was not very well. Others, it's been very busy, but big ones, definitely not. You guys let me know in the comments section below. Do you guys think that Royal LePage's forecast, which was not revised, or the Canadian Real Estate Association's forecast is going to be more accurate, or are both of them completely a bunch? Let me know in the comment section below. Now let's talk about the newest inflation data. When the May data came out and surprised everybody with inflation jumping up, that shocked a lot of people, and the kind of expectation the Bank of Canada would cut interest rates in their July meeting, well, that was tempered quite a bit. I said in last week's video why we saw a jump in inflation. A big part of that was because the Bank of Canada reweighted the basket of goods and weighted interest costs higher, which drove inflation up. I also said we're going to have to wait and get one more data set, and I think that'll give us a better indication what the Bank of Canada is going to do. We've now got that data set, and now we're seeing, at least the betting odds, a 90% chance that the Bank of Canada will cut interest rates in their next meeting, which is July 24th. Now, I put out polls about a week before all the time, and right now, 56% of you are saying the Bank of Canada is going to cut interest rates a quarter point. 30% are saying the Bank of Canada is going to hold interest rates where they're at. Surprisingly enough, 8% of you think the Bank of Canada is going to increase interest rates either a quarter or even a half point. Let me know in the comments section below. Give me one of those like up arrows, down arrows, or an equal sign, which direction you think interest rates are going in a July 24th meeting. Now let's go through the CMHC housing starts report. So from May to June, CMHC's seasonally adjusted numbers have housing starts down 9% nationally, down 13% in the urban centers. And I am expecting this to be a continuation. I've talked about it a lot. I think we're going to see fewer and fewer housing starts throughout this year. And I actually think we're going to see at some point housing starts drop below 200,000, which would be a significant drop. Our best year is about 275,000 housing starts in a year, not completions. Starts is the important thing there. Interestingly, Toronto saw a 60% decline in starts, Vancouver down 55%. Montreal was the real outlier where they were up 226%. That was also driven entirely by a large number of purpose-built rentals being started. There's a lot of money that was provided by the federal government to kickstart a bunch of projects in Montreal. So that's why you saw the big jump. Now, with all of these numbers, and CMHC talks in the report, there's a lot of volatility in starts. They try to kind of flatten things off with this 6-month rolling average that they use. So just know that these things tend to go up, down. And again, a start doesn't mean a completion. Now, remember, the government had pledged something like 3.5 million homes over the next 6-7 years, whatever it was. It's just not going to happen.
And I'll be right back.
That would need to see our construction starts essentially triple from our best year ever and do it 6 consecutive years. It's not going to happen. Absolute pipe dream. but I think we're going to continue to see it harder and harder to get construction projects started. Remember too, we've seen obviously the build up inventory in places like Toronto. A temporary jump in inventory is not indicative of excess supply in the housing market in Canada. We are short millions of homes. We're not keeping up with our population increase. So don't let the temporary jump, which is what this is right now, temporary jump in active inventory, puts you in a false sense of security that we actually have excess supply in Canada right now. Now let's talk mortgage rates. This was an article I saw in the Financial Post, but it kind of inspired me to maybe make this a regular part of these weekly news updates. And it's the lowest available mortgage rates in Canada right now. And if you want this to be a regular section, let me know and I'll make this a regular part of the weekly news update if I get enough people that say, hey, I'd really like to see this each and every single week. Now, when it comes to mortgage interest rates, of course, there's tons of variables, in terms of your personal credit, job history, etc. They're going to impact these. So just because I say this rate's available doesn't mean you're going to get it. And remember as well, what rates are available actually will also differ by province. Some of these lenders don't even operate in every province in Canada, but let's go through it here. Starting off with insured mortgage, so that's somebody who has less than 20% down. Best available rate is through Citadel, which is an Ontario-based lender. I don't believe they operate outside of Ontario, but their best rate for a 5-year fixed, 4.49. I said in my predictions video, I thought we'd see a 4.5% mortgage available at some point in Canada this year. Well, I guess I'll kind of count this as a win because it's not nationally, but we are seeing that. The best 10-year rate, and a lot of people realize you can actually get a 10-year term in Canada, is from Nesto, 5.79%, and the best variable rate is also through Nesto at 5.65%. Now let's talk about uninsured mortgages, somebody who has more than 20% down. The best 5-year fixed, also through Citadel, 4.99%. The best 10-year is available through Bank of Montreal at 6.03%, and Rate Hub has the best variable rate at 6.1%. Let me know if you want this to be a regular part of the weekly news update, and I will do this each and every single week for you guys. Supply in Canada's property market surges as mortgage renewals loom. So this article is just talking about the massive increase in supply, predominantly of condos, and specifically in Toronto, and how what happens in Toronto is kind of the indicator for what is likely to happen across the country. I've heard this a lot, whether from other real estate agents, mortgage brokers, people online, different YouTube channels, etc. It seems to be something that is repeated often, but I don't think this is accurate at all. I've said in many other videos that we don't have a national housing market. We have a bunch of very regionalized markets that have very different factors that influence what happens there. So what I'm going to do here, just for the brevity of this video, is I'm going to show what with pricing over the last 20 years, kind of some trend lines. If you want me to do a deeper dive into this and go through sales and active listings, etc., let me know in the comment section and maybe we can make this a larger video. But for this, we're just going to be talking about price trends over the last 20 years and see, is Toronto a bellwether, leading indicator for what's going to happen in the market, or is that kind of more of a misnomer? This is the Canadian Real Estate Association's composite benchmark price for the Greater Toronto Area over the last 20 years. You can see the trend line, and we hit the 2008 recession. We see home prices drop and then a continual march up. That 2016 time frame is when you see a big run up in prices and also a fairly significant correction down happening in 2017. Then from that kind of late 2017 all the way through to 2019 into early 2020, it's basically flat. Don't see much happening with prices. Of course, COVID happens, prices go through the roof. We see the big fall off in 2022, jump up last year's spring market, jump up in this year's spring market. Now what I'm going to do is I'm going to overlay other Canadian cities and their prices. Now, of course, if I overlaid Toronto over Saskatoon, the price gap is so big it would just flatten Saskatoon's numbers off. So I'm going to put them on the same point, so the numbers just ignore them. Just follow the trend line here and let's see what happens. Here is Vancouver, which is similar to Toronto in a very expensive market that's also very credit dependent and very immigration dependent. So they have a lot of similarities in their markets here, and you would probably expect to see a lot of similarities in the pricing. And you do to some degree. Again, you see that fall off during the 2008 recession, prices marching back up. You see a big jump up in 2016, but then you see that kind of like quick little drop off. But for the most part, basically from 2016 through to about 2019, they're basically flat in prices, and then a fairly significant correction down, and then the COVID spike up, spring market again. But what about when you take a market like Ottawa here that is a less credit dependent market? And of course you got very different factors with it being a major government town, the capital. So you see a much different price trend here. Again, you see that little drop off, but it's not much during the 08 recession. And then basically from 2009 to 2019, the market is almost flat. You see those bump ups continuously. That's the seasonal trends. And then of course, COVID, price spike up, and then you see the last 2 springs with those bump ups as well. But they didn't have that big run up in 2016 and then a fall off in 2017, 2018, like we saw in Vancouver and Toronto. Let's go away from Ontario and look at Montreal here. And this one's interesting. You see, again, basically no impact of the 08 recession. They really didn't see prices change that much, but a flattening off through basically 2012 through 2017. They don't see that big spike that Toronto saw in 2016 through then the fall off in 2017, and the run up starting up in 2017, and prices, of course, really take off in 2020 through COVID, 2021. We see the fall off. Again, that was similar pretty much across the board, but you see their spring markets look quite a bit different. They run up, but they don't fall off nearly as much, and prices in Montreal are catching up very quickly to where they were at the peak in 2022. Victoria, here's a really interesting one. We see the 2008 recession impact, then they kind of rebound, get back to where they were. But unlike in Toronto, Vancouver, where prices continue to kind of accelerate, we saw Victoria prices actually fall off, a fairly stagnant period where at best you could say prices really didn't change much. Then in 2015, you see things starting to take back off again. Not nearly the rapid acceleration that we saw in Toronto or Vancouver, kind of that lull period, and then of course the COVID spike and the last 2 springs. This is the price trend for Calgary, and you could replace this with Edmonton, Saskatoon, Winnipeg, Regina, all the prairies. You're going to see a lot of similarities here, which is going to lead me to the point I'm going to talk about in a second here. But this is also the chart why I say Toronto is not the bellwether for the Canadian real estate market, because we have very different factors across the country. We see again, run up 06, 07, things are really rocking in the Calgary economy. You see the 08 recession, then that gradual increase from 2009 all the way through 2015. And then you see a fall off from 2015 to about 2020 at best. Prices trade sideways, but they're basically trending down for that entire time frame. So they don't have that big run up in 2016. They don't have the fall off in 17. And then of course, we see the effects of COVID. Unlike what we've seen in Toronto and Vancouver, prices have continued to accelerate in Calgary. We haven't seen the fall off. They're well above their 2022 peaks. Let's wrap this all up here and kind of talk about the points that I want to make. I've said it over and over again in my videos. Canada's a very regionalized real estate market. What happens in one city is not indicative of what's happening in another. And Calgary, in my mind, is the absolute epitome of that. They don't follow any of the same pricing trends that we saw in Toronto. So if you're sitting in Calgary saying, oh, this happened in Toronto, Calgary will get it next, that's not true at all. Yes, Toronto has a major impact on the national statistic because I believe something like 40% of all the home sales happen in Toronto. So yes, what happens in Toronto is going to definitely skew the national statistics, but it has no bearing on what happens in Calgary, Saskatoon, Halifax, etc. What we are seeing though is that the regional differences or the regionality matters far more. The prairies are very commodity-based economies, so what happens with commodities tends to drive the real estate prices, whereas Vancouver, Toronto, much more credit-dependent markets, so when interest rate change, it impacts them a lot more. Much more immigration-based markets, what happens with immigration has a big impact on those markets. Halifax and the rest of the Maritimes and the Atlantic provinces, sorry, I made that mistake once calling all of the Atlantic provinces the Maritimes. Sorry about that, Newfoundland, I know you guys got upset about that. So the Atlantic provinces, very different market there, and of course Quebec, very different. So instead of looking at, oh, this happened in Toronto and that's what we're gonna see the rest of the country, look at what's happening in your region. That's more indicative of what's gonna happen in your city than what's happening in Toronto. There's an extended weekly news recap, so I hope you guys enjoyed it, kind of a deeper dive into this topic. This is what the YouTube algorithm says you need to watch next here on Bald Prairie Real Estate. If you love this video, please give this video a like, subscribe to Bald Prairie Real Estate, leave some comments below so we can chat with you guys in the comment section below. And as always, thanks very much for watching.